Well, next we turn to the financial markets, and the market indices of the Ghana Stock Exchange are expected to remain stable this week. Joining us with a look ahead is Patrick Edem Agama, Head of Trading at Republic Securities. Good afternoon to you. Welcome back from the break and to a new year, Patrick. As we look ahead, what is your outlook for this year as far as the stock market is concerned?
Well, good afternoon and a happy new year to you. As far as the stock market is concerned, we expect the equities to gain this year as well. Contrary to the trend we've seen for election years, in the recent times, we've seen election years recorded losses on the exchange. But looking at the pressure we are seeing from the buy side and the sell side, we think this year is also going to close in the positives. We are tipping the banking stocks to recover. The top losers for last year were mainly banks. We've seen about top 6 of the losers being banks and financial institutions. So we expect them to actually recover. This market is mainly run by the financial institutions. So if they recover, we expect that to record positives for the year.
Yeah, based on the list that I have here, the worst performing stocks were Access Bank, Ecobank Ghana, SIC Enterprise Group, and Cowbank. And the best performing, Guinness Ghana Breweries, BOP, Total Energies, Unilever, MTN Ghana. What happened with them?
Well, we've seen that there were a couple of investors that actually shied away from the financial stocks. So a lot of sales happen in the financial stocks, dipping the prices of these financial stocks. And equity investors always look for alternatives. And we saw the rise in the oil marketing companies. So Total and Bob, being the crude palm oil, also saw some gains in that regard. Other alternatives like Unilever and GGBL were also sought for by investors. MTN was the largest trader for the year because of its liquidity, and we saw that also reflecting in the price. We are expecting to see how these companies will close their final year and see how that will affect their first quarter performance as well for this year.
Well, so we are told that the Ghana Stock Exchange placed 10th in dollar terms among 15 stock markets in Africa in 2023. What do we make of this performance?
Well, this is impressive. It's impressive because it's been a tough year. In fact, coming into 2023 was tough for the country, and having interest rates so high and investors demanding other alternatives like the bond market and also going to the bills other than stocks was also in a state where the market has not been before. But we saw also people moving to non-financial stocks in order to cater for their equity investment. So that also helped the market this year.
Well, turning to the money market, it was quite a year in 2023. We saw interest rates rise. How did the treasury market fare, do you think, and what was the impact of the interest rate hikes on government auctions?
Well, on the money markets last week, we saw government raising 4.2 billion against a target of 4.1 billion, getting about 3% oversubscription. But we saw interest rates each declining slightly. We saw the 91-day closing at 29.24, declining by 11.66 basis points. The 364-day cleared at 32.49. Also decreasing slightly, and then the 182-day also decreased slightly to 31.88. We are expecting interest rates to actually trend downwards depending on how the exchange rate goes and all that. So when this happens, we expect the appetite from the government to also remain the same, like we've seen for last year, and investors will take advantage of that as well.
Yeah, I mean, we've seen inflation declining, and so we expect that to impact on interest rates. And so, going forward, I mean, from the investor perspective, people who have money to invest, you think T-bills are the way to go?
For now, yes, because it's clear now that that is the only instrument on the market that doesn't have any issue around it. And we've seen government's appetite still high, relatively high. So we we can say T-bills are the way to go. And inflation also now going below the interest rate makes these figures we get from the T-bills, I would say, sensible. So now you'll be able to maintain the value of your CD investing in T-bills.
Where else can investors put their monies?
The stock market is really a big place that investors can look to for this particular year. They should take advantage of the stocks that are down now, because you don't have to always be rushing for stocks that are already up. You look at the opportunities that are in the stocks that are trading low. Some are trading below their year highs and the year lows that we've seen. Even 5-year lows are being recorded in some of these financial stocks. So you should really look at those opportunities for this coming year.
Anything else we should have our eyes on this year as far as the markets are concerned?
Well, we should have an eyes on how the IMF discussion goes and how that's going to affect the appetite of government in terms of the treasury market. Investors are looking at that closely, because that's good, because we expect a lot of payment, a lot of coupon payment on the new DDP bonds in the coming weeks to come. So we want to see how government is going to raise money to be able to pay this. We expect dollar payments, also dollar coupon payments in February. So we are looking at how government is going to fund these interest payments.
All right, Patrick Agama, Head of Trade in Republic Securities. Great to have you on the program. Have a nice rest of the day.